it's about driving engagement. It's about increasing share of wallet and cross-sell with their own kind of consumers. What we know for sure is that embedded is the future, right? Embedded finance will be mainstream. We discussed that. Agentic AI will only accelerate that.
Welcome to the Enterprise Thought Leadership Podcast, where we explore the latest in enterprise trends, tech, and strategy with the top leaders shaping the future.
Welcome to Enterprise Unlocked. I'm your host, Radhika Mukherjee, Editor-in-Chief of Talk Fintech. Our guest today is George Toumbev, Chief Commercial Officer at NatWest Boxed. George was previously COO at Metal, responsible for operations, strategy, and planning. He has more than 20 years of experience in financial services across multiple platforms, including credit, risk, strategy, and operations. Welcome to the podcast, George.
Thank you, Radhika. Pleasure to be here.
Great. Thank you so much for joining us. And let's get right to it. Embedded finance is a rapidly growing financial instrument, offering accessible financing to consumers via retail or other non-banking institutions. NatWest Boxed recently partnered with Sainsbury's to offer a range of financial products. We'll explore the world of embedded finance in more detail in this conversation. Let's start with the basics. George, could you tell us about the scale of the embedded finance industry at present, in general, as well as specific to retailer-based embedded finance?
Sure. Firstly, stating the obvious, embedded finance is a pretty broad church and it encompasses many different products and propositions. But if you look at it more broadly, I think definitely embedded finance has moved beyond kind of the experimental phase of the theory and now is a mainstream growth strategy. If you look at UK consumer brands, for example, especially the bigger ones, let's say 100 million plus, 80% of them are using embedding finance in some shape or form to really drive their own strategy and objectives. Of course, when you try to triangulate these markets, there are different kind of sources, etc. But if you look at the revenue pool for embedded finance in the UK, that's about 5-6 billion right now, forecast to grow to about 10 billion by 2030. Most of that is lending and payments, with deposits making a smaller share. So really kind of a rapidly expanding market with kind of annual growth rates of 15% plus. There's a lot of benefit in this. Why are retailers looking at this? Really, it's about driving engagement. It's about increasing share of wallet and cross-sell with their own kind of consumers. We did some work about a year or so ago with BCG that kind of empirically showed that if you get embedded finance right, it can give you 10% uplift in conversion rates and up to even 30% in order values. And for these large businesses, even like a 2 or 3% uplift in total revenue is pretty huge for the shareholder.
That's very impressive. Lots of potential there. So what are the ideal industries for embedded finance offerings?
Yeah, there are a couple of kind of universal key success factors. Starting with to get the most out of embedded finance, you need to have scale. You need to have a sizable customer base or flow if you're on a platform with like frequent consumer interactions. It's very important that you plug in kind of the benefit of embedded finance within that flow or pipe. Then obviously digital first businesses, of course integrations are table stakes, but they need to work well and be done quickly. So businesses whose kind of models or kind of go to market is digital first tend to be better placed for embedded finance. Clearly retail is a prime example of that. E-commerce, travel are others.
Right. So that's a broad range, but let's home in on retailers, right? So what are major retailers like Sainsbury's looking for in an embedded finance partner?
So I mean, what we're seeing over kind of our time in the market, and increasingly important, trust. The word trust gets used a lot, but technology is ticket to the game. Everyone has modern microservice-based kind of cloud-native architectures. So that's a given. But for retailers, what's most important is their reputation and their customers. Sounds obvious or a cliche, but that is sacrosanct. So especially for large household consumer brands, they need to know that the embedded finance provider can maintain the level of service, protect their brand and reputation, and most importantly is able to scale with them and their ambitions. Because clearly, for brands with millions of customers in the UK or Europe, the embedded finance provider operationally needs to be able to kind of keep up with that and ensure that they realize their potential. So, trust is and kind of scalability are absolutely key.
Yeah. So we've spoken about the enterprise as well as the retail end, right? But how do consumers benefit from embedded finance?
Yeah, I mean, it starts with convenience, speed, and simplicity. Because consumers can access financial products when and where they need them, i.e. the embedded bit. The world is becoming embedded. AI and Agentic Commerce is going to just accelerate that tremendously. So financial services providers need to be where consumers want to engage with speed and simplicity. At the end of the day, a consumer doesn't care about financial products. They want to either buy or achieve a goal, and financial services really a means to an end. Probably other kind of byproducts of that kind of customer loyalty, perks, kind of rewards naturally come with this. So kind of the consumer getting more bang for their buck. Those are probably some of the key things. Ultimately, it's about making these everyday interactions easier rather than introducing more complexity in the system.
Right. That sounds like a win-win actually. So I'd like to find out how this win-win is kind of structured in practice. So what does the structure of an embedded financing partnership between, let's say, a retailer and a banking institution look like in practice?
Yeah, I mean, I think if you take a step back, the majority of risk, as regulated manufacturer of financial products, sits with the embedded finance provider, the banking as a service provider. So, they take care of all kind of the product development, compliance, etc. Right? That's kind of the manufacturing side of the equation. Then when it comes to the partnership, there are a couple of flavors. I mean, generally retailers, unless there was very large and they had financial services businesses before, which is increasingly less likely in the UK and Europe, they might have their own licensing. So that brings a dynamic where both parties effectively have some mix of regulatory responsibility. But the retailer is predominantly responsible for the distribution, so they do need some level of kind of regulatory permissions, kind of marketing and all this good stuff. At the end of the day, they own the client relationship. It's their brand, products are white labeled. So, they need to ensure that they are kind of going to market in the right way. Now, it's not so straightforward because these products are regulated. A retailer who has no experience cannot actually go to market without the support of the embedded finance provider in terms of financial promotion, etc. So kind of in a pure retailer setup, that's how it works. There are different variations of that. So let's say it's like a financial service or a consumer brand that's not purely a retailer, but they want to, for example, do their own KYC, and so on. That is also possible if they have the right permissions, but that brings different kind of engagements and operating models. But to keep it simple, if you take something like Sainsbury's, where we're going to be providing instant access savings and loans, it's their amazing brand. They drive the go-to-market, etc., with our support, and they're responsible for the distribution and consumer relationships. And we take care of the balance sheet of things, the underwriting, and also kind of all the risk management, transaction monitoring, etc.
Right. Okay. Very interesting. You mentioned the word white labeling as well. Do you want to kind of let us know a little bit more about how that works?
Yeah. I mean, look, at the end of the day, the embedded element comes from the fact that when you are a consumer of said retailer or platform, you don't want to know that you've come out of of that brand and you're in NatWest getting a loan or whatever it might be. So the white element is basically the mechanism by which we embed. I guess there are probably two flavors of that. Many of our clients like to use our white labeled app proposition. Very clearly we have a generic application and they just change the look and feel of it, but behind the scenes it's the same thing, because it's the sets of questions you need to ask to onboard someone as quickly as possible, for example. So kind of that's the white labeling aspect. Clearly other providers prefer to use APIs, which we also have, that allows them to build their own. It is more seamless, right? A single view of the customer, but that takes a bit longer. They need to invest. It's a more involved project. We actually, when we started our journey, our hypothesis was it will be API predominantly, but the nature of these things is you want to test and learn, find product market fit, MVP. So the white label app is probably a faster route to market and probably less costly to many of our partners. As they scale, then they can potentially shift to an API strategy to give them more control.
Right, interesting. What regulations also kind of are the guardrails around these products?
Yeah, I mean, at the end of the day, in the eyes of the regulator, it's let's take the Boxed example. In the eyes of the regulator, it is a Sainsbury's client, a consumer. They're getting a NatWest product, which is white label, if you go into the T's and C's. So yeah, basically NatWest is on the hook for ensuring all regulatory compliance of that product. There are some nuances, clearly, where the responsibility is shared when it comes to distribution and other things and data. But on the whole of it, just think of this like any other NatWest product. It just happens to have a retailer badge on it.
So the wrapper is the only thing that differs.
Yeah, exactly. And clearly there are other things. Could be like tone of voice and the things that are more brand related. But at the end of the day, with loans, CCA regulated loans in the UK, it needs to hit a certain standard. And because we're a bank and we do that probably better than most fintechs, this is kind of bread and butter stuff.
Right. Okay. So since it is the case, how do you achieve like seamless integration in the retail and financial aspects of such a partnership?
It might sound like a slightly lazy answer, but it's the project management and the kind of the planning of the integration. Right? We make it very easy for clients in terms of the white label app or APIs and developer kind of documentation. But at the end of the day, it's close cooperation, get the scope done early, and just have regular dialogue and tracking. Clearly, we employ a agile approach, so sometimes things pop up, but just being kind of close and being able to kind of resolve things quickly. Of course, this is all predicated on having the right kind of scalable architecture and modern platform, which we have. So that certainly helps.
Yes, so that was actually going to be my next question. So the architecture and the platform part of it. So what are the technological underpinnings of the front end and the back ends of embedded financial services?
Uh, so it gets used often, but I will use it again. It's the Lego bricks analogy, right? So you need a modern architecture and platform. Ours is microservice architecture built based around kind of the latest patterns and thinking. That's very resilient, cloud-based and so on. But at the end of the day, the underpinnings are make these microservices as atomic as you can, and then the client, we say, can curate their own proposition, right? So if they want to do predominantly lending or point of sale lending is next on our roadmap. They can kind of build these services together, and engage with them or take them to market in the way that's most appropriate for them and their brand. Clearly, there are things around that, of course, security, open banking, and so on. So, but behind the scenes, clearly the pitch is we take care of all the heavy lifting in the middle and back office, including operations. So you can focus on, building the brand and making sure you get value out of it. Because at the end of the day, none of these retailers care about financial services. They care about whatever product they're in and making sure their consumers get an excellent experience.
Right, absolutely. So how has the technology of embedded finance evolved in the last few years?
Yeah, I mean, that's kind of linked to my previous answer. So embedded finance has been around for a very long time in various different guises. I think, historically, the pain point was, the integrations were way too costly and not scalable. So, what's happened in the last, let's call it 5 to 10 years is, it's become much cheaper and easier to kind of integrate and make that more scalable. And things which are very important, like regulation and compliance, controls, things that keep you out of jail, previously were very manual, but now there's all these amazing tools, and the way technology works, you can plug in various solutions. So I think those have been kind of the unlocks to kind of allow these embedded finance offerings to flourish. Yeah.
Right. Okay. I'm just wondering. This may be a very basic question, but any AI or agentic AI use as well?
Yeah. I mean, the amount of hours being spent now on meetings about AI and agentic AI are very high. I think at the end of the day, it's about adding value to the business. So there's two strands. Firstly, there is the one that's probably discussed the most, is like the efficiency and driving scalability. So of course we are a scaling business. You have natural constraints in terms of capacity and so on. So a big focus for us in using AI is operational excellence, software development, being able to do more with what you have. So that's kind of one big theme. And then of course there is probably less clear, if I'm being honest, and many might say that AI is part of their proposition, but kind of the proof is in the pudding or in the eating. Kind of how would this translate into the services we provide to our clients, especially in the retail world? The jury is still out. If we're going to be shopping with our personal agents, what does that mean for embedded finance? And we're working through these strategic and propositional questions. What we know for sure is that embedded is the future, right? Because if you think about this agentic world, and the manufacturers of these products will be the banks, because they only have the money and the expertise to do these regulated products. Therefore, by definition, you need this embedded capability for the agents to kind of interact with them. So I think we're on to a winner in terms of the technology, but how it will be used in the journey, it's going to evolve.
It'll be very interesting to track this space for sure.
Yeah.
So let's shift to a slightly more serious thing, okay? What are some specific security concerns in the embedded finance sector?
Look, security is paramount in today's world. The bad guys are getting more sophisticated, and the platforms need to do that hand in hand. Our philosophy is to kind of maintain speed without compromising safety. Of course, we have the right ISO certification, 27001 and all these things. Hopefully I'm not kind of butchering it or belittling it. That's super, super important. But because we are embedded finance, banking as a service with multiple clients, what's very important are probably two things. Firstly, kind of how we've designed the system to be able to kind of tenant multiple brands, and very strict separation of data and segregation of activity. So that's kind of one obvious element, as well as hitting the right security standards. Because we're a bank, I wouldn't say banks are more safe than fintechs or others, absolutely not. But in terms of the bar from the get-go is much higher, while others, as they mature, you can imagine, they might get a little bit more time to get there in terms of hitting gold-plated security standards. But because we're part of the bank, we get hit with these high standards at the beginning. That is a challenge in terms of investment and getting it right, but it also raises the bar on security. And then the final bit is data. Data is paramount to anything you do here in terms of being able to deliver insights both to the client and a better experience for customers. So, sharing data with clients is also kind of very important. GDPR is, a challenge. That's probably a separate podcast about GDPR in Europe and the fact that, that needs a serious look in to ensure Europe is competitive. But nevertheless, we do it within the kind of GDPR constraints, ensuring that all data is shared for the right purpose and with the right consent.
Right, absolutely. So could you give us a shape of how data security is handled overall in such offerings?
Yeah, I probably kind of went into some of that already, but maybe giving a bit more detail. At the end of the day, both. It depends on the setup. As manufacturer, most of the data sits with the provider, but clearly, kind of the brand or the retailer also has certain responsibilities. But it's all about getting together and figuring out what data you need for different purposes, and then ensuring that data is then used in the right way, shared in the right way, in a secure way, and only for those types of purposes. Clearly, with personal information, you need to be even more careful, etc. That's why, for large consumer brands, working with someone like NatWest gives them a lot of comfort in terms of how seriously we will take that. Again, not saying other smaller fintechs don't take that seriously, but the bank has quite a different kind of engine that goes behind personal data and how it treats that. Our mission is to make that as seamless and as useful as possible to enable both us but also the brand to make decisions, right? Because at the end of the day, they need data to be more effective with marketing and so on.
Yeah, totally understandable. You kind of brought up some challenges almost, especially with data and so on and so forth. So let's go into that in more detail. What are some major barriers to success for embedded finance projects and programs?
I think the first and greatest challenge to kind of success in these projects is what we talked about earlier, which is, are you plugging into a scaled process, and how central is that to the business objectives of the client? Many projects, these retailers are looking for different growth avenues, etc., and they experiment with embedded finance. But if it's on the side, it more often not it struggles. So kind of misaligned, poor go-to-market strategy is absolutely the main killer of these things. Then it's the post-launch customer support, kind of supporting the customers in the right way, and monitoring that. So we have weekly kind of trading meetings, as we call them, with our clients, where doing the deal, signing the term sheet is only part, not even starting to climb the mountain. I think once you're live, if you don't scale these propositions, then clearly the embedded finance provider doesn't deliver on the business case, but also the retailer doesn't achieve the ambition that they set out to do. So kind of supporting through that process is paramount. And finally, I guess operational kind of resilience and scalability. To my point before, if you have a lot of volume going through the system, and clearly the retailer or brand is incentivized to use the embedded finance solution, then the provider needs to be ready to scale with that ambition. And quite often, they struggle, because especially if it's a huge brand, they flip a switch and suddenly the volumes spike. And if you're not ready, then that could be a big challenge.
Yeah. So to meet something like this, how would you prepare? And in fact, what would be your advice for setting up a successful embedded finance program for 2026 and beyond?
Yeah, I think in terms of the key success factors and just things to do, firstly, it starts with a common vision and North Star of what you're trying to achieve, especially with kind of big partnerships. I mean, we're NatWest, clearly we work with all kind of retailers and brands, but given the commensurate size, I think big retailers, complex organizations, you need clarity of that kind of North Star and OKR. That's point one. Which often implies a joint business case that you build, that you can get behind and stress test. So that's kind of success factor one. Then it's about setting up the right kind of cadence. I don't want to use the word governance, the G word, because it's not there to create overhead, but kind of through the life cycle of the project, from kind of implementing, go live, and then scaling it. Kind of having the right engagement model with the client is absolutely paramount, because nothing will go kind of in a straight line. So those two things are very important. And then be ready and nimble when things go wrong. They will go wrong, and have the right kind of processes or even escalation for when things are not right. So those will be some key things.
Sure. What would you also recommend as a tech stack? Any recommendations?
Oh, now as a chief commercial officer, I have to be careful, going into technology, going off piste. But I think the key thing is back to my Lego analogy. Scalable kind of modern tech stack is a must, but everyone can do that. And now with probably AI development, literally they can do it in half the time. I think what's most important is the layer around the technology, which is all the services that go hand in hand. So writing code to onboard someone or doing the screens of the journey is pretty trivial. What is the difficult bit is wrapping that up in the right kind of process or service that you can give to a client, in terms of what happens with the unhappy parts when you have to do manual checks or manual onboarding or underwriting. All of that. That's the key to success. I think the tech stack it will be driven by the latest and best architecture out there.
Yeah, of course. So it's the combination that you're talking about, right? The technology and the product thinking that has to go hand in hand.
Yeah, exactly. Product thinking and operationalizing it, because especially again for big retailers or brands, they're not banks. They don't want to deal with the regulatory burden, and also they don't want large, expensive projects. So effectively, what what they're buying is the trust and the expertise that you can deliver those products and scale them safely without messing up what's sacrosanct to them, which is their brand, and like everything that comes with that. So the reason why I think we're particularly well placed is, we're completely outside of NatWest. We have our own kind of tech stack and product and everything that you can imagine. But at the end of the day, we're under the umbrella of a kind of a framework or kind of policies and structure that runs now 20 million customers. So, yes, there's some overhead in being part in a large bank like NatWest, but there's a lot of good stuff around how you run and these consumers safely, how you operationally deliver excellence. So, taking that and transposing it in Boxed is been a big benefit to us.
Very interesting journey there for sure.
Yeah.
So to wrap up, tell us about 3 predictions for the future of embedded finance.
So embedded finance will be mainstream. We discussed that. Agentic AI will only accelerate that. So that's a given. I think regulation is already and will catch up. At the end of the day, this proliferation of embedded finance and financial products making it so easy means that you do need to be careful, because we need to ensure that consumers don't get the wrong outcomes or don't get into trouble. And then probably the final one, which is more structural, is that banks will, whether they like it or not, move towards more being like product platforms. Of course, they will still have their own agent and some branches and direct customers, but they will become closer to manufacturers in a manufacturer distribute model. So that has really big implications around kind of their own strategies, kind of this disintermediation of the consumer that we talked about 10 years ago is massively being accelerated now. So like the Gartner curve, only now is it really becoming acute. So basically banks will need to navigate that and figure out, they're still best placed to manufacture these products, but they will need to distribute them in a different way and have different models and capabilities. So that's probably my last one. So yeah, banks as platforms.
Thank you for joining us for the Enterprise Thought Leadership Podcast. Please do follow us on social media and subscribe for more ideas and insights. Until next time.